With VettaFi, and welcome to today's webcast, How to Invest in America Reshoring. Today's webcast is sponsored by Tema ETFs. And some of the things we're going to talk about today include why reshoring is a new important secular trend. Also, how reshoring is accelerating a lasting industrial revolution. And then most importantly, an investigation of the companies most likely to benefit from the U.S. manufacturing resurgence. Okay, this is something that's been going on. You've seen more and more about it. We're going to get into the details. It's going to bring a lot of questions. So again, there are no wrong questions here. If you've got a question, just type it into the Q&A section. We're going to try to get to as many questions as possible towards the end of the presentation. And speaking of questions, if you've been with us before, you know we love asking you questions in the form of polling questions that'll pop up on your screen. Very easy to participate. There are no wrong answers. The fun thing is we share the results right away. You get to see how you stack up against your fellow advisors. Now, there's some information in the folder widget that you can see on your screen, specifically details about this tool and strategy. There's also some thematic ETF managed differently blog posts that you can have links to, reshoring, megatrend, a lot of good information specifically about what we're talking about today. And then finally, I've got a quick favor to ask. We love getting your feedback. There's a clipboard icon on your screen. In there is a brief survey, and I mean brief. It takes you less than a minute to fill out, but it gives us good feedback specifically on what we're talking about today, but we also use that feedback as we ask you about other webcast themes that you might want to hear about. So we appreciate your feedback. You help guide us as far as our educational pieces and as we offer them in the future. So thank you. Thank you so much for that. Okay, it's my pleasure to introduce today's speakers. First, Chris Semenuk is the Tema Reshoring ETF Portfolio Manager. Chris, I've been really looking forward to this. Thanks for being with us.
Hi, Tom. Thanks for giving me an opportunity to introduce our fund to your audience. Looking forward to it.
Thank you. And Daniel Ducina is Director of Investments at Blue Chip Partners. Daniel, welcome. It's great to have you as well.
Thanks for having me, Tom. Greatly appreciate it and looking forward to the conversation.
So guys, before we get started, we're going to ask the advisors on the call this question. Had you previously heard of the trend of companies reshoring their manufacturing to the United States? And again, guys, I'll tell you, we always get some really good, honest feedback. So yes, you've heard of it, or no, you haven't. And I'll leave that up there. Excellent. Chris, what would you think the percentage of people that may have heard about it? Again, I don't know the answer yet, but what would you guess?
Tom, I would guess a very high percentage, upwards of 90%, as the theme has been really been picked up much more in mainstream press, like the Wall Street Journal and the New York Times lately. So yeah, I would say upwards of 90%.
Not that far off. We're about 84. So, I mean, still, I think that's a number that's really, really high. So obviously, we've got a lot of people have heard about it, and they're definitely interested as well. So, you know, let's dive in, because there's a lot of great things to talk about here. I think first and foremost, as you're pointing out on the slide here, we want to hear, you know, specifically about the manufacturing that's coming back on shore. And it looks like you've highlighted some of the companies here, Chris.
Yeah, so I think it just initially, you know, I think this slide really demonstrates a couple of things. So reshoring is real. It is a trend. It's a mega trend that's been underway now for a few years. But I think a lot of investors and a lot of people that view the theme focus on the large branded multinational businesses like the chips companies or the auto companies that are going to make EVs. And initially, when we approached the theme at Tema, we started there. But as we dug deeper, we found that the trend goes much deeper and much wider in terms of the investment opportunities available. So at Tema, our reshoring fund casts a much wider net because we think that great reshoring investment opportunities extend way beyond these large cap businesses to even smaller and medium sized manufacturers. And not only to manufacturers, Tom, but also to the suppliers to those manufacturers and their service providers. In fact, I think in a lot of the smaller and medium cap sized businesses, I feel that the reshoring trend will, in kind of a wholesale way, transform their future growth. And we plan to give our investors, or we do give investors, exposure to these, I would say, hidden gems through the reshoring fund.
Yeah, and give us some examples, if you would, maybe touch on a few of these.
Yeah, so Boeing actually started reshoring a few years ago. They've taken some sub-assemblies back from Asia and put them in Oregon. Everyone has heard a lot about Taiwan Semiconductor. They're spending over 40 billion US dollars in Arizona. Apple is making laptops. They're making the MacBook Pro in Texas. And even international companies are being drawn into the reshoring trend. As right now, the spending that's being put into place by the government is essentially making the US that sort of epicenter of global investment right now. But the trend, as I said, goes way beyond these sort of headline level businesses, and it goes down into medium and small cap businesses that supply these companies. And we can talk about them later on in the slide.
So Chris, what are some of the key drivers behind reshoring? Why is it all happening now?
Yeah, so I think this is really important, and I'd really like to drive this point home for your audience. If we step back for a minute, I think it's important to say what reshoring is. And before we talk about why companies are coming back, let's talk about why they offshored before we talk about why they're coming back to the US. So globalization was essentially driven by one thing, and that was a search for low-cost labor. And companies basically, went to Asia because in Asia, in the US, to make a product, it costs 40 times more than it did to make that same product, for example, in China. But if you flash forward back today, from 20 years ago, that 40 times is down to less than 4. And if we do take into account additional costs, like, for example, managing quality control from 7,000 miles away, or policing IP theft, or just simply transportation costs, that 4x number actually goes closer to 0. And we haven't even really talked about the biggest cost, which is essentially, what if you just can't get your product to the US? So, what if you can't get things like acetaminophen? What if you can't get important chemicals, important, things like raw materials for rare earths, for example, or key pharmaceutical ingredients that you use in the pharmaceutical process. So if you can't get products, the cost of that is sort of just, hard to really kind of pinpoint. So getting the reshoring process going has essentially, as I said, gotten to a point where the cost is now perhaps even more beneficial to shore in the US than it is abroad.
Yeah.
A lot of people say
trade wars play a role in this. Also, costs of shipping, especially through COVID and everything. I gotta imagine it's made it tougher, right?
Yeah, I think that these trends, I think what really has driven reshoring is that there has been this sort of singular focus on sort of globalization. And there have been a lot of unintended consequences of globalization over the past 20 years. And those unintended consequences have opened up vulnerabilities and dependencies that I think are only now just being discovered and this is what reshoring is beginning to address.
Yeah. Hey, Dan, jump in here. What would you add to what Chris is saying? And then, most importantly, when you think about allocation in your portfolios, why did this come to the surface?
Yeah, well, first and foremost, I think Chris hit on a ton of great points, but the only thing I would add is that companies that are exposed to this trend are starting to get credit for it. Market participants are agreeing with this decision to reshore production, and that's very much top of mind, especially given the disruption that we saw on the back of the COVID pandemic. In terms of portfolio construction, what I would say is that blue chip partners, being bottom-up investors, we're always going to focus on company-specific items. But having said that, if you can find companies that are exposed to secular trends, quality businesses that are exposed to good trends can do even better. If you've ever kayaked or canoed, you'll know that trying to paddle like a salmon swimming upstream is very difficult. It very much is helpful to have that current flowing with you. And I think that's a very good analogy for what reshoring is. Some of the businesses that are exposed to this trend are poised to benefit for the next 5 to 10 to 15 years. This is not just a one-year phenomenon. And again, I think you're seeing market participants start to appreciate that.
Yeah, so great points. And Chris, moving on here, as you pointed out earlier, major media is picking up on this, right?
Yeah, so we're seeing a lot more mention. So when we speak to companies, which is where we start our research, a lot of companies are beginning to refer to reshoring during their results calls. And what I did yesterday, I went to take a look at some of the transcripts from the meetings that we do with the management, and I just pulled some of them. So rather than just believe me, I can just share with you some of the comments from the executives that we spoke to. So reshoring and reindustrialization has and will begin to change the growth prospects for our industry. And that was the CEO of Eaton, a large electronics company in the US. When asked about reshoring, the chairman of Union Pacific Railroad said, anything that brings more industry to the shores of the US is good for us and good for rails. A large equipment rental company said, reshoring trends have significantly accelerated our growth, and mega projects represent a multi-year flow of dollars into the industry. And Wesco, which is a very large distributor of electronics to factories, said all of our companies are looking at reshoring, and I think we're looking at a multi-year super cycle. So it's actually happening. It's down in the trenches. Companies recognize it. It's not, reshoring isn't just a thing. It's actually happening, creating revenues and profits for businesses.
Dan, let me ask you. When you think about clients, obviously you're looking to invest in profitable businesses. You've got a mega trend that you're able to take advantage of as well. But is there any political aspect of it where manufacturing in China was very advantageous for U.S. companies, but now maybe the benefits aren't as great, and then geopolitical implications as well? Does that play a role?
I think there's certainly aspects of political motivations as well. I mean, anything like politics and in financial markets, things kind of operate as a pendulum. They swing so far to one direction before coming back to the opposite direction. And I think some of that is what you're starting to see now. Some of the disruption that was posed even before the pandemic with the trade spat between the previous administration and China, companies start to get tired of that because it can weigh on their businesses, and thus investors get tired of it as well. And so I think there is some certain motivation that stems from those type of aspects as well.
Tom, I also just would share, I would also just add to what Dan said. I mean, I think a lot of investors may think about reshoring as kind of a defensive approach by companies, as they're trying to unwind these sort of supply chain dependencies and these just supply chain vulnerabilities. But a lot of managements that we speak to more recently tell us that they see reshoring as sort of an offensive approach to their industry. Namely, when you're producing closer to your customers, you actually have to carry less inventory, so it's less costly from that front. You can provide better customer service. So you have shorter product cycles, you have more product cycles, and more product cycles means more growth and hopefully a higher share price. So It's both a defensive measure, but I think more and more as we kind of dig deeper into the theme, we see that a lot of companies are now seeing it as a way to play offense.
So Chris, earlier you gave us a couple examples of some pretty big brand name companies that we all know and love. Go into a little bit more about the types of companies that kind of are part of this mega trend.
Sure. I think this slide that I think everyone has in front of them, slide 9, that talks about how we sort of categorize the reshoring theme, is a really good place to start with that. So, until we launched the Reshoring Fund, I think a lot of investors have been limited to accessing the theme through a very top-down, passively managed approach that relies on kind of a one-size-fits-all scattershot to accessing this mega trend. But instead of using this sort of passive approach, the Reshoring Fund employs what I think is a much more actively managed bottoms-up process that really starts at a micro level on the factory floor and sort of works its way out. So I'll give you a couple examples. So Caterpillar, if you look on the left-hand side, these are manufacturers that are moving some of their production back to the US. Caterpillar moved some of their sub-assemblies from Asia back to Victoria, Texas. And when we visited with Caterpillar, we actually take the opportunity to walk their factory floor. And so as we see them assembling, we notice that they're using, for example, hydraulics from Parker Hannifin. We also see that they're using clips and clamps and hoses that are provided by Fastenal. When we go and see, for example, a data center out in Denver, we see that the data center has been a big user of scissor lifts that are provided by Terex. In that same data center, when we spoke to the site supervisor, they talked a lot about access systems being very critical for security. So that brought up a conversation about Allegion, which is essentially a comprehensive service provider for all sorts of locks and access mechanisms. So if you kind of look at this slide, I think you can see, or investors should see, reshoring is sort of a journey, and it's a journey by the reshoring manufacturers, but that journey also requires, in some ways, picks and shovels, and those are the companies that you see in the middle and on the left. And through the Reshoring Fund, we're giving you exposure to the manufacturers, as well as the critical components that they need to reshore, which are in the middle and on the right-hand side.
Yeah, great points. Okay, I'm not trying to talk too much on the political side, but what role is government playing in all this?
Yeah, that's been getting a lot of headlines. Reshoring has essentially been accelerating over the last, I would say 3 to 4 years, but it's really been kicked into high gear by government stimulus and incentives. But I think it's really important for your audience to know that, in the course of speaking with managements, government checks, management tells government checks are being written and projects are getting awarded. But most of this future spending on projects has only just started. Some of it is starting late this year, but the bulk of it will surface in 2024 and the years beyond. I think when you really step back here, Tom, what this sort of almost $2 trillion in spending has done is essentially made the US the biggest draw of global investment.
So you're seeing pretty much a consensus across the aisle that this is a good move for the US?
Yeah, I think there has been generally a universal positive in both Republican states as well as Democratic states. I think there was I've heard some people indicate that the IRA, the Inflation Reduction Act, was only supported by Democrats. But the fact is that since the passage of the act, a lot of the benefits of the IRA have been very much felt in Republican states. And that kind of sentiment has almost gone totally quiet.
Okay. So I think we all remember the years past, and Made in America meant a lot. Is there a revival there?
I think there is. I think that customer perception amongst a lot of demographics is becoming much more attentive to the Made in America label. And if investors take a look at this slide from Walmart, which we included, I think it's a very good example of how the positive impact of reshoring sort of flows throughout the economy. Walmart essentially has targeted 350 billion of goods made in America to sell through their stores over the next few years. That spend has created jobs because people need to make those products here on American shores. It improves Walmart's customer perception because Made in America is becoming more important. And a lot of consumers have said they're willing to pay a slight premium for Made in America goods even. Making goods closer to home also saves on emissions. And even the automation sector is going to get a bump in demand, as automation will be very much required to fill the gap in some of the skill shortages that we currently have in the country.
Daniel, when you think about Made in America, does it matter as far as portfolio selection? Or this time around, when we're thinking about Made in America, is America better prepared and better set up to take full advantage of it from a profitability standpoint?
It's a great question, Tom. And to be honest, I don't think you would see companies taking on this entire reshoring exercise if it wasn't beneficial to their business long term. Investors wouldn't reward that. Management teams wouldn't be able to explain themselves. And so, yes, I do think that this Made in America movement is a little bit different this time around. Again, like Chris was hitting on, I think there is a lot of productivity to be gained. It's not always immediately visible in profit margins in years 1 and 2. But when you think about the dynamics at play in terms of ability to better serve customers, those are types of items that will be very much appreciated by investors going forward.
Yeah, great point. Chris, we know that there's a lot of money that's going to be spent on infrastructure. What other sectors do you see reshoring benefiting?
Sure, and I think if investors just take note of this slide here on the effects on many industries beyond infra, I think, as I said earlier, up until now, investors have been kind of relegated to kind of accessing the theme through what I would say are kind of very broad top-down themes like infrastructure or like robotics. But our fund just goes so much wider and so much deeper because we see so many great investment opportunities well beyond those two, if you will, sort of sub-themes. And just to give an example, a conversation that we had with process automation company Emerson, one of the largest automation companies in the U.S., that led us to a very large, but I would say most of your investors have never heard of, distributor called Applied Industrial Technology that is located in the Midwest, but actually has a network of solutions and sells automation equipment, from the East Coast all the way to the West Coast. A conversation, for example, that we had with Micron and TSMC, two of the largest semiconductor companies, that led us to a waste management company, for example, called Clean Harbors. Clean Harbors, I would venture, is a company most people have also never heard of, but they actually have 70% of the market for disposal of hazardous waste. And as reshoring and industrialization start to pick up and reaccelerate here in the US, hazardous waste will also go up, and demand to kind of mitigate that will actually expand the trajectory of their earnings going forward. The theme is deep. It's very wide. Just to give you one example, another one, during a site visit to a factory, as I said, we learned about Allegion. As I said, they're a complete supplier of access systems in and out of the factory. As I said, there are picks and shovels and there are manufacturers. There are great opportunities for both, and we hope to provide those in our fund.
Guys, we're getting a lot of good questions. We want to make sure we've got enough time. Let's move on and talk about kind of this bottoms-up approach and some of the companies that you've uncovered.
Sure. So, Tom, I think one of the things that one doesn't get when you approach the theme from a top-down view is you aren't really seeing these really very interesting, very unique ideas that I think reshoring will transform. So one of the examples we have on this slide is ATI. So we came across ATI because on a visit to Boeing, Boeing told us that one of the biggest bottlenecks in their manufacturing is getting demand for titanium. So the current lead time for titanium post the Ukraine war is 80 weeks. So this company called ATI is a titanium manufacturer based here in the US. They restarted some of their titanium manufacturing here. They knocked on Boeing's door and said, we can supply titanium as soon as Q3. And the lead time on that will be 7 weeks. ATI ended up getting a contract with Boeing, also ended up getting a contract with other aerospace manufacturers here in the US like Airbus. So essentially have changed the demand for their company from a metals maker to also a component supplier. They're targeting higher margins and higher profitability. As I said, we take a look at automation companies like Rockwell. That led us to a company called Applied. Applied is one of the biggest distributors of Rockwell automation equipment in the US. So if you're a small and medium-sized company, you generally don't get direct access to Rockwell salespeople. You have to go through Applied, and Applied's business is changing overnight because of that. We talked to a medical device maker that wanted to make a medical device here in the US to get the Made in America label. It was a very expensive proposition that they considered until they found out about a company called Flex, which is essentially a contract manufacturer located here in the US that this medical device manufacturer ended up hiring to make the product and got it to market more than 2 years sooner than they expected. I've already talked a little bit about Clean Harbors. It's a business that we discovered while talking to 3M on a factory tour. Again, a 70% market share in mitigation of hazardous waste. Clean Harbors has typically told investors we grow our revenue at GDP plus 1 or 2, and now they're telling investors due to reshoring, they're growing their business at GDP plus 4 to 5%.
Yeah. Daniel, look, there's a new, obviously, Tema's new ETF about reshoring just launched, but you've been looking at these companies for a while. Talk a little bit about what the benefit is to you as far as having this ETF available. Is it, are you able to get additional information about the underlying companies, the relationship that we've got with Tema, that type of thing?
Yeah, what I would say is even someone that conducts a fair amount of boots on the ground research, the level of depth that Chris and the rest of the team at Tema are going into on these businesses, I think is fairly unrivaled across the industry. To hear Chris talk about the kind of chain reaction that happens within the investment process, I think that's incredibly powerful, especially within a space that, in my opinion, requires active management. And so I certainly think that taking advantage of active management in this space needs to be done in a prudent manner. And that's why you're trusting a firm or a set of individuals that you believe can provide that type of outcome.
So did you know about the team before they launched the ETF?
I did not. I was a colleague at one point and eventual client of one of the members of the Tema team. And so through that relationship, as the team has started to blossom and get things up and running, that's where we came into contact once more.
Gotcha. And as an asset manager, as an advisor, look, there are a lot of ETFs that are out there, but do you feel like there's an added relationship by being able to access people like Chris?
100%. Again, I think just like the quarterback of a football team is incredibly important, I think you say the same thing about portfolio managers. Again, I'm an advocate of active management in just about any space, but when taking advantage of these types of secular trends, I think it's even more important. Whether that means hiring an in-house team or hiring an external team, these types of trends can expose companies in good ways and bad ways. And that's why I think it's important for active management.
Yeah, that's great. Chris, it looks like this is a trend that's not slowing down.
No, I think Tom, that if there was one slide that really demonstrates that this theme is gotten underway in a big way, it's the slide that shows the monthly U.S. construction spending. So after really hardly growing much over the last 20 years, here it is. I mean, the trend is underway, and I think the construction spending part is really just chapter one of what I think will be a very long and durable trend moving forward.
Yeah. Another quick question for advisors. Are you looking to add exposure to this reshoring trend? Yes, maybe I'm thinking about it, or you're not. So I'll just leave that up there. I mean, this is fascinating, guys, because I've heard a little bit about it, but actually diving into the details and looking at the pure volume of companies that are in that space, it makes so much sense. So Dan, talk a little bit about, if you would, how you think about incorporating this type of strategy in a portfolio. Where does it fit? And, in order to make room for it, what do you sell?
It's the age-old question, Tom. Where does this fit in my portfolio? But in all reality, I think that because of how dynamic the companies that are involved in this trend are, I think it really takes the place of a core quality allocation. This encompasses large, mid, and small cap. Certainly the dominant portion of these companies are in the, call it, mid cap range, but there's plenty along the large cap realm and in the small cap realm as well. If you call back to that slide that Chris walked through earlier in terms of the manufacturers, the facilitators, and the beneficiaries, sure, there are some name brands out there, Union Pacific, Caterpillar, Boeing, et cetera, but there's a whole host of companies that average individuals may or may not have ever heard of before in their lifetime. So I do think that because of that fact, it's a very large and, I would say, dynamic space that's still very much developing as we speak today and in the years to come. And the fact that you have the support of so many businesses through this reshoring trend and the support of construction spending, like Chris mentioned, I do think that companies that are exposed to this trend might end up seeing less cyclicality going forwards, because I know that's going to be one hesitation of folks in terms of replacing a, call it, core quality allocation with something like a reshoring focused vehicle or set of companies. But in all reality, Chris mentioned this is how we operate at Blue Chip Partners as well. We're very much focused on bottom-up security selection. So it's one thing to have strong tailwinds. It's a complete another aspect to make sure that you're taking advantage of those tailwinds in a prudent manner. That's why I think it can take advantage of or take the place of, call it, a core allocation for advisors.
Yeah. So Daniel, I mean, we're not going to go down a rabbit hole here, but we know the S&P's had a pretty good run this year, and it's all based on the back of 7 stocks. Advisors have enjoyed their allocation there, but they're a little scared. They're scared about too much exposure to a small group of companies. They're a little bit scared about valuation. They're scared about volatility. Are you seeing that RSHO is RSHO, this ETF, is a way to diversify away from the S&P 500 and not have that huge exposure?
I absolutely think so. I mean, the S&P 500 is dominated by just a few sectors. Certainly there's a component that is populated by industrials, but not to the degree that I think is indicative of the folks that are actually driving the economy forward in the United States. And so I do think that now is an opportune time to start, paring back exposure, taking some chips off the table, patting yourself on the back if you've been overweight tech. But in all reality, I think now's the type of time where you want to batten down the hatches a little bit, focus on quality, and focus on those companies that are exposed to these tailwinds and potentially even trading at a discount. So like I mentioned, the fact that these types of companies really sit at the middle of this massive Venn diagram between large, mid, and small cap and quality and value and exposure to tailwinds, these are the reasons why I think that this type of trend can fit very well into the core of an advisor's portfolio. Again, these businesses come in all shapes and sizes, and the fact that, again, they are swimming with the current, not against it, I think is a bigger deal than most average investors realize.
So good points. Chris, let's dive into the approach of Tema and how they go after this. Because look, facts are there are a ton of ETFs out there. Thematic strategies are popping up all over the place. How is your approach different?
Yeah, our approach is different, Tom. As I said, we're taking a very active a very focused approach to what we think are some very unique themes right now. So number one, we offer unique themes. Reshoring is one of them. We offer also, as I said, a very actively managed, hands-on approach using very comprehensive bottoms-up analysis. And these funds that were on our platform, so it's right now just reshoring, but also luxury goods, and also a monopolies, a fund that focuses on high market share monopolies businesses. Each one of these funds are managed by very experienced fund managers who have years in the industry. Moreover, each of these managers has deep experience within the themes themselves. So for example, I've covered capital goods and industrials and manufacturing businesses for a large part of my career. The person managing our luxury goods fund has years covering those businesses. And the person managing our monopolies fund has a great deal of experience covering these very high market share businesses. So, we take that unique approach, that very active bottoms up approach to the themes, and we wrap it all up in what we think is a very actively managed risk control process. As we understand that capital preservation is sort of front and center and goes before capital accumulation.
So this is active, but the ETF industry was built on the back of indexes for a long period of time, especially coming out of the financial crisis. Indexes did pretty well, tax efficient, low cost. Where do you see this strategy and being different and all? What are the advantages?
So as I said, I think when you look at our fund, we think that the active approach really gives investors, our active approach really gives investors access to the best ideas. And again, it's a top-down approach, or for example, an index approach, or if you bought, say, an industrials index fund, you would get, perhaps in some cases, hundreds of names in there. You would also get things. So, for example, if you look at the S&P Industrials Index, you even get financial stocks in there. You get even some airlines in there. So, I mean, to put it differently, you get a lot of junk in some of those very large passively managed index funds, and you don't get pure exposure to the theme that you get through the reshoring fund at Tema.
Yeah, and Daniel, look, weigh in here. I think in the last couple of years we've seen so much activity. We keep talking about how much money is in motion. The challenges that we had in both equity markets and fixed income markets last year, the uncertainty of what the Fed's path is going to be, how they're tackling inflation, where rates might be. It just seems that things are happening so quickly. So does that have you feel a little bit more confident that this team, if they find a short-term trend that's changed and there are companies that are affected by it, A, they can get rid of them, or B, they can take advantage of new opportunities?
I'd say absolutely, Tom. I mean, I would wholeheartedly agree with what Chris mentioned about just a simple passive allocation. In a world where 5 stocks account for more than 25% of an allocation to the S&P 500, I think you have to be very cautious with so much hanging in the balance. I think people are admittedly a little bit scarred from last year. That includes actual financial advisors as well as their clients. And now really is a crossroads. And so I think this is time for all of us to prove ourselves and to do it in a manner that is, I would say, prudent on behalf of our clients. And one great way to do that is to make sure that you're trusting and partnering with actively managed trusted partners if you don't have an in-house investment team. And so taking advantage of some parties like that, I think, can help you weather through some of that uncertainty, because I do think what you mentioned is spot on, how fast information develops these days. I think that's a key component to why making sure you know what you own and are able to be nimble is paramount in a year like 2023.
Yeah, good point. So Chris, dig a little bit deeper in the portfolio. Talk about positioning.
Yeah, sure. So as I said earlier, reshoring is mostly, Tom, a domestic theme. But on our fund, we look across all sectors. We also incorporate foreign companies as well, because as I said, the U.S. incentives and the unprecedented spending that is currently being offered out there is making the U.S. the sort of hub for global spending at the moment. So we incorporate some foreign names into the portfolio as well. For example, even outside of industrials, we see exposure to a consumer staples company called Compass. We were on a factory visit to I think it was Intel. We were having lunch in their cafeteria, and we actually noticed that the logo on a lot of the people that were working in the kitchen was a Compass logo. And we realized that actually we recognized that from some other factory tours that we had made earlier in the year. It turns out that Compass actually specializes on providing food services to industrial manufacturing companies that operate around the clock on 3 shifts a day. So it's not just the industrial sector. We go beyond. We do we include foreign businesses as well. And we're going to capture all these ideas in our stock selection.
Okay, that's excellent. Now, talk about the investment process. And again, I want to make sure we get some time at the end, but this is unique to your strategy.
Yeah. So as I said, we're looking at the universe through a very bottoms up, kind of a micro level. And as I said, we start on the factory floor and we work our way out. We take a look at the equipment these companies are buying. We look at the processes they use. We even actually ask them about bottlenecks that they have in their manufacturing. We take a look at all of these ingredients. We look at how the 4 walls of the factory were made. We even look at the services that those companies are buying. So for example, there's a company that does inspection and safety services. So when you erect a factory and you have to lay cables in the ground, you need someone to come out there and designate where you can dig and where you can't dig. Once you get the factory built, you have to have it inspected for fire and safety. So reshoring has really stimulated demand for a lot of these types of businesses that go beyond just manufacturing. And hence we use a very bottoms up approach to our security selection. We, as I said, wrap that up with a very risk controlled approach. So for reshoring, for example, we look at both economic risk, we look at political risk, and we look at actual business risk. So we're monitoring daily the kind of ebb and flow of politics out there, despite the fact that we think that reshoring is kind of, is not geared towards either Republican or Democrat. It's a universal theme that we think is very durable. And as managers of these funds, as I said, we live, eat, and breathe these themes. And that's what I think, we're trying to add to the process through our stock selection. And as I said, make sure that through these funds, through reshoring, we give our investors the absolute best opportunities to invest in the theme.
Daniel, last year was a great example of, if you were concerned about risk management, the baby got thrown out with the bathwater. It wasn't just, growth equities, but it was value, it was quality, it was low volatility, it was high dividend. Obviously, the fixed income side of the market as well. We're at VettaFi surveying advisors all the time. And like I mentioned before, valuation is a concern, volatility is a concern. So when you think about not just the advantages of this strategy to be in the right place, but also the ability to control risk, how do you look at this management team?
Well, I think an emphasis on risk management is going to be important with whoever you partner with. And even maybe just to take it a step further, I think one of the biggest risks present in advisor books of business is simple overlap. If you have 2 different ETFs or 2 different mutual funds, those managers aren't talking to one another. And I think it's important to note that a very large concentration in a single position, either owned by itself or through 2 different mutual funds or ETFs, can pose a great deal of risk. And the reason I'm bringing that up is because I do think that's one aspect that differentiates the companies that we've been talking about for the last 45 minutes from the rest of the market. Certainly you might find some in the larger indexes, but certainly not at as large portions as you might find in a fund like RSHO or in our individual allocations at blue chip partners. Now, the whole idea of risk management, I think, is different across the board on the buy side, whether it's at Tema or one of the largest investment managers. There should be a focus on risk management, but to have individuals that live and breathe the industries that these themes are targeting, I think that's very important, especially as you're going down the rabbit hole and specifically trying to identify companies that are benefiting from a fairly emerging theme. So I think the risk management aspect of the process at Tema, I think it's backed up by the fact that the managers have a significant depth of experience in the respective spaces.
Thank you. Chris, briefly, if you could, walk through fundamental analysis research, the way you folks look at it, and specifically as it's applying to this ETF.
Sure. So in a nutshell, basically, as I said, we get our best ideas from the companies that we're investing with. And it's through that kind of network that we have with our businesses that we source great investment ideas. We're conducting very comprehensive bottoms-up analysis in an almost forensic fashion, pulling apart the cash flow. We only invest in companies that have very strong balance sheets. We try to develop relationships with the companies, with the managements of the companies that we own. We talk to, even outside the companies, we talk to academic institutions that are focused on future trends in manufacturing. We talk to private equity that are funding projects to essentially leapfrog current technologies in manufacturing and make the US a leader again. We're striving to essentially make ourselves, or striving to sort of be seen as the thought leader, at least with the reshoring product in manufacturing. And this analysis, as I said, is very focused on bottoms up and very focused on capital preservation and making sure that the balance sheets of these companies will get them through thick and thin, regardless of the outlook for the economy.
Yeah. So I know we want to get to some of the questions, but this is a little bit more detail. And again, if advisors are interested, they can dig in deeper with you individually. But what would you like to share here as far as the fundamental analysis and your individual conviction on some of the companies that you own?
Yeah, I think it's important to for investors to realize that, as I said earlier, reshoring is really a journey. It's going to be a multi-year journey for businesses and American manufacturing in general. It took us, 30 years for America to kind of relinquish its leadership in global manufacturing. And we think it'll be at least a decade or two to kind of reindustrialize the country. And I think that great ideas in this universe of businesses that we're looking at will be kind of consistent earnings generators for years to come. But as I said, they're only going to be found by really kind of just drilling down and do basic blocking and tackling and speaking with managements and speaking with factory site managers on the ground to come up with these ideas. But again, it's a very long-term and durable trend that we think will go on for years and throw up great investment opportunities.
Okay, so Chris, wrap it up with these fine points, because I think you're driving it home right now. And then most importantly, we're going to dive into some of the questions. We got some great questions.
Yeah, sure. So I think this sort of focus by the U.S. or this sort of singular adherence to globalization over the last couple of decades, has opened up sort of unintended vulnerabilities, as I said, and unintended dependencies. In some ways, reshoring is a defensive response to that, because companies are reshoring to, in some ways, sort of unwind those dependencies. But moreover, through our stock selection and through our conversations with managements, reshoring is becoming an offensive approach in driving and wholesale changing the earnings trajectory for these businesses. And that's really what we want to make sure that we give our investors exposure to through the Tema Reshoring Fund.
Yeah. Final question for the advisors. Do you plan on adding to or initiating a position in the Tema American Reshoring ETF? Again, the ticker is RSHO. We get a lot of people asking for that ticker, RSHO, in the next 6 months. Really appreciate the honest feedback. We'll leave that up there, folks, while we dive into some of your questions. Really, really great questions here as well. So, boy, a lot to choose from. All right. So here's a good one, Dan. Advisors asking, why is RSHO a more compelling exposure than a general industrials ETF?
Well, I think it's a lot of the facts that we've already discussed, but I think most importantly is that you are getting a more targeted application on a pointed theme. Just getting exposure to industrials is one way to play reshoring, but I'll call to mind that reshoring isn't just about the industrials sector. You saw the slide that showed healthy participation from other sectors like materials and information technology. So I think by getting just exposure to industrials in a blanket way, you're selling yourself short and not fully participating in the theme. And the second point I would add is just that if you were just simply going to allocate to the industrial sector, be it in an equal weighted or market cap weighted manner, you're still not focusing in on the companies that are poised to be either the biggest facilitators or beneficiaries in this theme. So I think that essentially investors would be selling themselves short if they chose to play this reshoring theme in that manner.
Yeah, great points, Daniel. Chris, here's a good question. If geopolitical tensions settle, will it impact the reshoring trend? What do you think?
Yeah, I think, Tom, that's a great question. I think what I would say is that the reshoring trend, as I said, is being driven by companies that are essentially addressing these, as I said, unintended dependencies and vulnerabilities in their supply chain. And as I said, these kind of bad habits of globalization that were built up over the last couple of decades are going to take time to unwind. A lot of investors, I think, get caught up by looking at, reshoring is being driven by the war, wars, geopolitical conflict or trade wars or pandemics. Those kinds of events aren't driving reshoring. Those three events just are simply highlighting the fact, and they're also accelerating reshoring. So they're not actual drivers, but they're, as I said, they're accelerants to the reshoring process.
So Chris, while I have you, another good question. What parts of the U.S. are most benefiting from reshoring? When we saw this slide earlier, I'm thinking, boy, it's happened around the fringes. It's happened along the coasts. Is that the case? Is it actually a geographical opportunity, or is this just a coincidence?
So I think that reshoring, from the work that we're doing, reshoring actually impacts, broadly speaking, the U.S. But what you have to understand is that there are and have become reshoring states. And through our actively managed process, we can actually focus in on states that are actually absorbing most of the reshoring that's currently going on at the moment. So if you take a look through the US and see where a lot of the money is getting spent and where a lot of the construction and manufacturing is starting to happen, it's in states like Arizona, like Texas, North Carolina, South Carolina, Tennessee, some parts of Florida. So reshoring, the trend isn't really a one size fits all. And hence, if you use kind of an industrials ETF, you may get lucky and capture some of the businesses that we own, but you're going to get a lot of things that go along with that. So like I said, in some of the industrial ETFs, you get banks, you get airlines, which are businesses that won't benefit from reshoring. So our active approach, as I said, can kind of, narrow in and zone in on parts of the US where we think reshoring is going to have the most impact.
We're getting some great questions. Chris, here's another one for you. What are the bottlenecks to further U.S. reshoring to date? Capital, jobs, incentives. are there a lot of bottlenecks out there?
I think one of the most critical kind of, I guess, popular bottlenecks going on right now is permitting. So there is a lot of permit legislation or kind of rethinking permit legislation that's going on right now. That being said, permitting will kind of just, initially slow things down, but, the ball is already rolling, and reshoring as a trend, as I said, from that one slide, we've seen construction of factories beginning to ramp up in a big way. And permitting, as I said, could potentially sort of, make reshoring, less of kind of, all it's really doing is postponing the inevitable, which the earnings are coming. They're coming in 24 and beyond, according to, as I said, a lot of the managements that we speak to. But beyond that, I don't really see any other barriers to the trend.
Hey, Daniel, I'm seeing a term throughout maybe 2 or 3 of the questions here that says nearshoring. And one, Pierre is asking, do you see a similar dynamic happening with nearshoring? And he says, i.e. Mexico. So tell us what nearshoring is, and is that a trend into itself?
I'm going to let Chris take this one just because I think he's going to have more depth to it than I will.
Okay,
yeah.
Good.
Yeah, so Tom, nearshoring is essentially, to define it, when a company wants to reshore to the U.S., they may actually opt to reshore with an ally of the U.S. So they may opt to reshore in Canada or Mexico. I would say that is sort of a close cousin of American reshoring, but I think one of the things that investors should be careful about when they do invest in a kind of a nearshoring or a friendshoring idea is that countries like Mexico and Canada have been kind of involved in the legislation that is out there, the spending that is going on in terms of the CHIPS Act or the Infrastructure Act. But depending on the administration, some of those foreign countries that are in NAFTA, in the North American Free Trade Agreement, it may turn out that they are kind of excluded from some of that funding. So, as I said, from our standpoint on the Tema, American Reshoring Fund, we're investing in businesses that are focused on that are investing onshore in the U.S.
Okay, Dan, I'm going to throw one to you really quick. This advisor is asking, what factor exposure does RSHO offer me? So do you look at the factors within the strategy, or are you a factor allocator at all? Does that help?
Yeah, well, what I would say is we do target certain factors as inputs in order to get to our desired output. And so what I would say in terms of what you're getting from the reshoring theme and ultimately RSHO from Tema is equal parts quality, value, some size. And so realistically, I would term this, that's why I term this as kind of a quality core allocation, is because you are getting exposure to robust businesses that are well diversified and taking advantage of a secular theme, but oftentimes, can be trading at a reasonable price, and generally speaking, a discount to the broader market. So I do think you're going to get a heavy dosage of quality from a factor perspective, potentially some value as well. But overall, I think it's a pretty complete package.
Well, folks, we're at the top of the hour. I want to be so respectful of people's times. I want to thank all the financial advisors that joined us today. Hopefully you enjoyed this. You enjoyed hearing about the strategy. I know you enjoy hearing about new trends, and this is definitely a hot trend that we need to keep aware of. And I know the folks at Tema will keep us posted. I want to thank Tema for being such a great partner. Congratulate them on their entree into the ETF space with such a big splash. If we didn't get your question, don't worry. Somebody from Tema will reach out to you personally and make sure we get your questions answered. And then finally, Chris, Daniel, gentlemen, thank you. This was really excellent. It was exactly what advisors need as they're thinking about investment strategy, portfolio construction, and also incorporating the most important new themes that we're seeing in the economy. So, gents, thank you, and hope to see you back here again soon.
Thank you.
Thank you very much.